My name is Marshall Abbott. I'm the CEO of Arrow Exploration. We are an active and robust explorer and producer in the Llanos Basin in Colombia. And we are about to experience a step change in production and cash flow, and hopefully that translates into share price as well. Thank you for having me, Matthew.
Marshall, thank you very much for the introduction. Good to meet you. I think you're sitting in Calgary, and it's famously cold there at the moment. What's the temperature outside?
It's only minus 42, and that's why 5 million people don't live here.
Amazing, absolutely amazing. And there you are in shirt sleeves, and presumably you're being powered by wind and solar at the moment, because that's a key part of the grid.
Well, sadly, natural gas is a primary contributor to our electric power grid, and it's much more reliable.
Yeah, no, it is. Sorry, it was a facetious comment of mine. I'm a great fan of the right energy sources in the right places. But your Arrow Exploration is producing oil in Colombia. You came on the company. The company came onto Crux 2 years ago and explained what you're about. You've had a huge amount of activity since then. It's probably worthwhile just kind of taking a step back and telling us where you were at the start of 2023 and kind of where you've ended up, just as a kind of just to orientate us.
Certainly. So probably most importantly, we've drilled 11 for 11 wells in the Llanos Basin in Colombia. We have doubled production from the beginning of last year to now. And we feel we're on a glide path to double production again by the end of 2024. So we're in a very fertile part of the Llanos Basin in Colombia. And there is amazing hydrocarbon density there that I've not seen in my 40-year career. So we're pretty excited with what we've got in front of us.
And you say you're on 11 for 11, which translates or kind of means, if I understand you right, you drilled 11 holes and hit 11, had 11 successes. And you were able to, how many of those were you able to bring in production or tie into an existing kind of pipeline network?
Well, that's a great question. So we are well placed and well positioned with respect to energy infrastructure in the Llanos Basin. So as soon as we drill our wells, it typically takes 7 to 10 days, another week to get them on stream, and we're drilling down to 10,000 feet. We sell our oil at the wellhead immediately upon production. So we have various companies that are active in the oil marketing arena, and we get paid as soon as the truck leaves our well site. So there's no transportation risk. So we're very quick to get wells on production, which is a bonus. And on top of that, our average royalty hovers around 12%. So the fiscal regime in Colombia is very generous.
If we kind of contrast the kind of when this started 2023 and when you left, I mean, I can see that you were on about kind of your exit rate was around 3,200 barrels of oil per day. What did you kind of enter the year at?
What was our production at the end of the year?
No, the start of, what was the difference between the end and the beginning?
So beginning of the year, in 2023, we were really relying on one well producing about 360 barrels a day.
Okay, so you effectively almost increased tenfold during the course of 2023 up to 3,200. Is that you exited at?
That's right. I think we were 3,280. And we've got a drilling rig about to spud again. So as I mentioned, these wells take 7 to 10 days to drill and another week to get on stream. So we're excited with our operational tempo.
You drilled 11 wells last year. How many are you looking to drill in 2024?
Good question. So at a recent board meeting, we had a $45 million capital expenditure budget approved. That entails 15 wells, and it's development and infill weighted, so very low risk. And we do have a couple of exciting exploration prospects that we'll pursue towards the end of the year. But we're drilling, as I said, mainly infill and development wells that come on in a vertical sense in excess of 320 barrels a day. And we're going to be drilling horizontal wells that come on in excess of 1,000 barrels a day. So it's a very exciting time in the company. And we're just looking to get the word out to ensure that we're doing our job on the marketing aspect.
In terms of the horizontal well drilling, am I right in thinking that you're putting in 6 horizontal wells out of the 15? I may have got that, maybe it's an older number, but in September in one of your presentations you were talking about putting in 6 horizontal wells. Is all of that technology in place, and kind of are you proven that can happen kind of on schedule in Colombia?
So horizontal drilling has been a centerpiece in Colombia for about the last 10 years. And the reservoir that we're going to be drilling horizontally into is very thick, upwards of 60 feet thick. And the expertise certainly exists with the robust service industry in Colombia. And from my own personal perspective, I've had 20 plus years of horizontal drilling experience, not only in Canada, but in other jurisdictions as well. So horizontal drilling is pretty straightforward. The technology is fabulous. And geosteering is a fun part of the game when you're trying to stay at the top of the reservoir. And once you drilled out approximately a mile horizontally, turning that well on is very exciting. In fact, in our reservoir modeling, we have very high permeability, upwards of 6 Darcy permeability, 30% porosity, and relatively light oil. We could theoretically produce at much higher rates. I won't quote a number, but we're budgeting 1,000 barrels a day per horizontal, and we can do well in excess of that with submersible pumps. So that really gives us the optionality to increase production when we want to.
And the decline rates on these holes is, is it dramatic, or is it kind of relatively steady?
Very good question. The first year, we would expect upwards of 30% decline. And the decline thereafter is harmonic in nature. So these are very reliable wells that will recover in excess of 1 million barrels per well. And they cost us about $3.5 million net to our share to drill, which is about 50% more than a vertical well, but we're enjoying 3 times the production.
Sorry, so run those numbers again. So what's the, it produces 1 million barrels of oil. Is that what you said?
That's the estimated ultimate recovery. As I mentioned, the reservoir characteristics are fabulous, and we've got a very strong natural water drive that takes our recovery upwards of 35%. And the discovery we made mid-year last year has added 40 million barrels of oil in place. We'll recover 35% of that number. So it's a very exciting discovery that we've made.
And that was the CN discovery. And when you talk about kind of 15 million barrels of or so of recoverable oil, is that including kind of 1P, 2P, and 3P all kind of collated together?
There would be no 3P in that number, but 1P and 2P. The reserve additions that we enjoyed, and we did an interim update after we produced the CN2 well. It's $143 million of 2P reserves at 10% discount. So that more than doubled the reserve base in the company.
Did you get a price response in the share price to that?
We did. It was rather short-lived. I would say, though, that in the downdraft that has hit the public oil sector, we have not experienced an equivalent downdraft. So we stayed well above the AIM Energy Index, well above any of the Canadian indices as well. So I think there's pent-up demand for the share price, but it's shown me time, we feel, and we're about to show the market.
Well, I will want to come back onto the kind of the psychology of the oil sector and what the markets are doing relative to valuation and how to close that gap. But let's just stick, if I could, for the moment, with some of the kind of the field stuff and the in-country aspects of it. Can you? I couldn't quite understand from my limited research about the 50% working interest, because some of that is contingent on assignment. Could you explain the commercial agreements you've got with Ecopetrol, please?
So we have a partner, a Colombian-based partner called Petrolco, and they were responsible for getting this contract area over 10 years ago. And the company made a significant investment in acquiring a 50% share of Petrolco's block in the Tapir Basin, in the Llano Basin, Tapir block specifically in Colombia.
Sorry, Arrow made the investment.
Yes, and so we are the operator, and we consult with Petrolco on a daily basis. They're very good partners. They're well financed by a high net worth individual in Colombia. We've got an excellent working relationship with them. and we've made them quite a bit of money, actually. So they're happy guys.
And so when it talks about a kind of contingent on that that profit share or the economic split, there's no real contingency on it. It's kind of an ongoing working relationship.
It is an ongoing relationship, and there's quite a bit of term left on this block. And it's our goal to extract the resource as efficiently and cleanly as possible, acting as operator the whole time. So it's a really good working relationship with Petrolco. And as I mentioned, in the last year, I believe net operating income was close to 40 million and free cash flow was close to 12 million for them. So yeah, they're happy guys.
And when you talk about the NPV of a well, is that on a 100% basis of the well, which for investors and analysts to understand the economics, they have to split that 50-50 with what Arrow's portion and what Petrolco's portion?
We make it a habit to broadcast net volumes, net cash flow, net working interest. So typically in the Tapir block, it's always 50%.
But when you mentioned the CN Discovery adding $143 million NPV value, was that Arrow's share or the...
That was that to Arrow.
Net to Arrow. Thank you. That helps me get my head around some of the numbers. So is Llanos the kind of the main thrust? Is that where your all the 15 wells are going and the exploration dollars are being spent? I mean, because I know you've got another basin in Colombia.
The Llanos is where we're going to be spending 100% of our effort this year, for sure. As I mentioned, it's a very fertile basin. It is the heart of the Colombian oil industry. Colombia is 900,000 barrels a day and 650,000 barrels a day comes out of the Llanos. And we're in a particular part of the basin where, as I mentioned, there's very high density, very high hydrocarbon density. So we're kind of the sweet spot in the middle of the basin. And other operating companies in and around us have taken notice of that. So it was a highly sought after block that we are fortunate enough to be able to execute on.
And last year you did a kind of pretty comprehensive 3D or a large 3D seismic survey. Has that changed the way that you've done your targeting? Has it improved your success rate? I mean, 11 from 11 is maybe you didn't need to do the 3D seismic after all.
So the 3D has been absolutely integral to our drilling plans. It was 130 square kilometer 3D. And that to us is about $3 million. It has easily paid dividends. 3D seismic is absolutely essential in the Llanos Basin. You can't rely on 2D data. You'll miss the top of the structure. When you've got 3D, and the play type that we pursue is a high structure that's got three-way closure up against a fault. When we identify these faults, we look for these bumps that exist, and 80% of the time they're filled with oil. We had a rather significant surprise in the deeper horizon called the Ubaki. That was upwards of 60 feet thick, and we're looking to exploit that as aggressively and cleanly as possible.
And I don't want to get too technical, but when you talk about a high structure, is that a kind of a drag fold onto the fault? Or
yeah, that's a good way to look at it. It's a kind of a domal feature that through tectonic activity has been elevated prior to oil migration. And when these things are present, as I mentioned, there's 80% chance of success that it's oil filled.
Of the 11 wells you drilled last year, presumably there are multiple. I mean, if you've got suitable hosts in a suitable structure, suitable reservoirs, you'll get multiple a stacked column. What does that mean for you, and can you target areas where you think you're going to get more stacks?
So on almost every well we drilled, there was upwards of 5 hydrocarbon-bearing reservoirs on the way down to 10,000 feet. We've focused on primarily on the one at the top of the stack and the reservoir at the bottom of the stack. And what that really provides us is optionality in choosing which one's going to be the highest volume producer, at the same time which one is the least amount of risk. And we're careful not to overcapitalize either. So those 11 wells were all development wells, And we met our numbers that we broadcast at the end of the year or at the beginning of the year towards the end of the year. And having multi-zone potential in every well we drill just makes this much more exciting and, frankly, much more fun.
It's important to have fun all the way. But when you talk about the top reservoir and the bottom reservoir, is that a function of just their thickness and their kind of porosity, permeability characteristics?
So it's really defined by the age of the rocks, but the upper reservoir we call the Carbonera C7. It's Miocene in age, so relatively young, but maximum thickness there is probably 30 to 42 feet. The basal sand that we're pursuing is called the Ubaki. It's Cretaceous in age. The oil's a little heavier, but it's much thicker, and the oil comes out just as fast. Our netbacks on the heavy crude are about $50 a barrel. Our netbacks on the light crude and this Carbonera are about $62 a barrel. That's using $78 Brent. So the economics are fabulous.
And are you preferentially doing the horizontal wells in the thicker Ubaki, deeper?
That's entirely accurate. So the first 3 wells will drill at the top of the reservoir. The subsequent 3 wells will drill at the middle of the reservoir just to ensure that we get maximum recovery rate. And our estimated ultimate recovery will dictate that we're recovering over 1 million barrels net per well, which is very exciting for us.
Presumably the superior production characteristics of a horizontal well is a function of contact with net pay.
Absolutely right. So these horizontal wells will be extending almost 1,500 meters. And we're having a dedicated horizontal pad being constructed as we speak. We hope to drill the first horizontal at the beginning of April. The pad will be ready the middle of March, and then it takes a good 2 to 3 weeks to move the rig on site. We have a very large rig, a 2,000 horsepower rig, to ensure that we can drill this well safely and successfully without getting stuck. And as I mentioned, the oil service industry in Colombia is very robust. I'm quite impressed with the technology that exists here.
Do you have to frack and use proppants and do any of that, stimulate?
No, there's no stimulation required. In the Ubaki reservoir, in our modeling, the permeability is 6 Darcy, which is extraordinary. And in the C7 Carbonera, it's 2 to 4 Darcy. So the oil comes out fast, and the natural aquifer is recharged by rainwater out of the Andes, and that provides the reservoir drive. There's no natural gas entrained in the oil, which is quite unique. And so we don't have to deal with methane emissions, and it's very good for our ESG potential as well.
Earlier you mentioned kind of capital discipline. How does that, what did you end the year with in terms of your cash figure? Because I couldn't see that number. I think in September you were aiming to end the year with about $18 million. I just and how do you make sure that you're not spending more than you're earning?
Well, that's a very good question. So we intended to end the year at 18 million cash. I think latest estimate is we were around 15 million, but we had prepaid a bunch of our invoices. So from an equivalency standpoint, yeah, we exited at 18. But today we check our cash position every Monday, and today we're sitting on 15 million of cash. With this risked budget that we're embarking on, we intend to exit the year north of 15 million of cash, and we'll be cash flowing $2.5 to $3 million a month. So from a financial perspective, we're very healthy. We have no debt and don't intend to take any debt on.
And presumably as each well starts to contribute, you become incrementally more robust as the year goes through in an ideal world. Does that mean that the work program is slightly back-ended towards, does it increase in activity through the course of the 12 months?
Very accurate. Yeah, that's a good assessment. And the bulk of that would be the results of the horizontals. So, drilling the first one in April, that rig won't leave the horizontal pad before year end. And we have a second rig at a different location at Carrizales Norte that we intend to keep there all year round as well. So 2 wells dedicated, or 2 rigs dedicated, and the optionality to move to a 3rd rig as well.
For kind of an external, someone who's not close to the story, who's not following every week, kind of not living and breathing the Arrow exploration kind of chat room stuff, what are the kind of the main catalysts that they need to be looking out for? What would you see as the kind of the key milestones for perhaps getting a waverer? Let's say someone is saying, "Oh, I like Arrow exploration, but they need to show me some kind of proper stuff before I kind of dip my toe investing in their company." What would you say were the kind of the key things to look for during the course of the year?
Well, for start, we're undervalued to a large degree, and certainly it's going to be a focus of mine to spreading the word. But I think show me is a very accurate assessment. So the first well of our program in 2024 will spud next week. 2 weeks later, we'll have production rates on that released to the public. And that rig will then move 25 meters and start drilling the next well. And from the Carrizales Norte perspective, we're going to have 7 to 8 wells drilled by year end. And then from a horizontal perspective, as mentioned, by the end of April, we'll have production rates out of the first horizontal that I think will capture a lot of attention. And subsequent horizontal wells will just add to that particular impact. So in the near term, we're certainly going to enjoy production out of the 2 reservoirs in a vertical sense. And then at the end of the first quarter, we're going to see production impact from these horizontal wells that are going to be quite material. And as I mentioned, the reservoir modeling has shown us that we can pull on these wells very hard.
Sorry, did you say end of first quarter? I don't mean end of the second quarter.
So in the first quarter, the vertical wells are going to provide the impact.
Yep.
And then the first horizontal will be at the end of March. We'll be reporting middle to end of April.
Oh, okay, great, fantastic. So that's a kind of a continuation of the show me, track record of delivery, which you've been doing pretty impressively during the course of 2023. So kind of keep watch on that. Now let's get to the kind of the psychological aspects of markets and the valuation that you're talking about. I mean, you're trading on less than 2 times cash flow, is that right? Or around that?
I would say that forward-looking cash flow, we're trading at less than 2 times cash flow.
These are strange times in the oil and gas sector because it's very unloved. It's this dirty, smelly, sticky, unpopular thing that pollutes the atmosphere. But as you know, sitting there in minus 30, whatever it is, 37 degrees Celsius weather outside, it's important for modern life. And I'm a great believer and advocate of the importance of hydrocarbons in our modern society. But it seems as if the market doesn't feel the same way as me for some strange reason. I can't understand why.
Well, I think this transition to renewables and recyclables and has dominated the headlines, which is very interesting from my perspective, looking at the macro oil situation. The only jurisdiction that increased oil production in the last 24 months has been the United States. And the Permian has had a huge impact on oil price, as we've seen with price wars in the past. But the Permian is starting to roll over. We're seeing EOG, which probably has the largest presence in the Permian Basin, is only adding 3% to their production on a very robust CapEx budget for this year. We don't see any other jurisdiction outside of the U.S. increasing their production. So I think over the course of time, we're going to see the goalposts on oil price increasing from their current situation, $70 to $80. I bet you we're going $80 to $100 inside of 12 months, just based from a supply dictum and a demand dictum. So I'm an optimist. What do you expect me to say? But I've seen these cycles before. I've seen this movie before, and I think we're due for another gradual production increase. Nobody in the business wants to see a drastic increase in oil production. That does nothing for anybody. But I think a smooth, gradual climb in light of worldwide CapEx is the answer.
Okay, so two questions lead on from that. One is about worldwide capex. Are you saying that we're at historic lows in kind of capex invested into the oil and gas sector? Is that the point?
That is the point. Referencing what we produce on a daily basis, I believe we're close to 1.2 million barrels a day. And to increase that in a material sense is going to take billions and billions of dollars. And, the companies have become far more healthy with this wind at our back on oil price for the last 18 months to 2 years. I just don't see the industry being able to catch up with a growth on that 1.2 million barrels a day. In fact, I heard a stat the other day for us to enjoy an increase of 1 million barrels a day on that number, we would have to build 300 million electric cars to take the place of that 1 million barrels a day. So I think there's going to be an appreciation over the short to medium term that hydrocarbons are a necessity and they're going to be with us for quite some time.
Well, we come back to the point that you made earlier that you're an optimist, but surely you speak to institutional investors who are jaded cynics. And has your interaction with them changed in the last 6 months? Are they hard-bitten investors as they are? Have they come around to saying, actually, this is a trade that I'm interested in, the valuations are out of whack, these things should be trading on 8 times cash flow or 10 times cash flow, not 2 times cash flow? Has that conversation popped up with you?
So from a valuation perspective, we have a very significant presence in the institutional market in the UK. The AIM exchange has been a fabulous experience for us. Trading at 1 to 2 times cash flow is as low it's been in my career. The highest I've seen in Canada has been 5 to 7 times cash flow. I don't think we're going to achieve that sort of plateau, but certainly north of the 1 to 2 times we're enjoying now, 3 to 4 would be a pleasure. I think the institutional base that we've got in the UK has been very supportive and patient. And we're looking to expand that institutional base in Canada and on the continent. At the same time, we want to really increase in our retail sector shareholders. So we're going to work very hard on marketing the company on both fronts this year.
You've been on AIM for just over 2 years. You were just telling me before the call. Has that come with volume? Has that come with kind of trading statistics? How much of the stock is traded in London versus Canada?
So the bulk of the activity has been in the UK, to be sure. The Canadian audience has been challenging. There's been quite a bit of institutional flight on the Canadian hydrocarbon exchange. And what we've seen companies do is they're looking at buybacks and getting their debt down to manageable levels. So the industry's become quite healthy. But I think the institutional mindset in the eastern seaboard of Canada and the U.S. is that they're looking for consolidation in the industry. Whereas in the UK, there's a different mindset that, hey, here's a little guy that can enjoy explosive growth and I can make more than my 6 to 8% return annually on companies like this that are well managed, debt free, and are well located.
Well, it's great to hear a success story on AIM because although I've got no kind of vested interest, it's always good to hear a good story. It takes a lot of flack for for some of the exploration companies, particularly on the hard rock side. But being a producer, I think it puts you in a different category. And of course, there's depth of capital here as well, which is that you've obviously discovered. Marshall, thank you very much for your time. It's been a pleasure getting to know your company a bit better. And I hope in the course of your marketing that you come back and tell us how you're getting all those horizontal wells in particular.
Erlen, I really appreciate your time today. We look forward to disseminating this news in a timely fashion and look forward to our next discussion.